Hi, welcome to the video today, which is on the 25th of May. We're on Thursday. In today's video, we're going to give our updated outlook for the euro against the USD. And we're also going to be looking at EURJPY. We'll go to the charts in just a moment. Now, in terms of the euro, we've done a few videos on it in recent weeks. We were looking for a breakdown against the USD. That has occurred. We're in a downtrend. It has far further to run, in our view. EURJPY, we're looking for a break to the downside, but the pair has been firm, but we think we will get a trend reversal shortly. Both are excellent risk reward trades in our view. We're going to go and take a look at them, but just before we do so, if you want to learn all our trading techniques, as well as check out our daily technical sentiment analysis of 14 FX pairs, including the two we're going to look at right now, you can get limited life access to our member center. Also beneath the video, you can join our free educational mailing list. Follow us on Facebook and join our Facebook group of traders if you wish. Right, first trade setup will be Euro USD. Right, we're on Euro USD chart, and since we topped out at 111, we've actually gone into a nice downtrend. Now, we've been extremely bearish of the euro since that move up to 111. It has been a decent fall. There's far more downside to come. I'll go through levels of entry, stop and target in a moment, but just want to go through the reasoning of why we are so bearish of the euro. Okay, interest rate hikes by the ECB, two are discounted by the market. Okay, but will they deliver? Our view is they will not, but if they do, in the price. The reason they won't deliver, in our view, is the economy is going into recession. I've been saying this for a while. Germany's confirmed it today. Germany is the country that really matters in the zone. It's the powerhouse of the zone. If you look at data coming out of Eurozone, it's mostly missing the optimistic forecasts of analysts. Now, in terms of just some charts I want to show you in relation to the Eurozone economy, I want to go to this one. This shows economists' growth forecasts. Okay, now if we look at the US, big downgrade in growth here. Okay, only a minor downgrade in growth in the EU, and obviously a big downgrade in China. People are still too optimistic about the zone. Now, I showed this chart a few weeks ago, and it's still valid. It warned of a recession. I think it's from a guy called Steve White. Industrial production, you can see it there, the white line. Look at the forward indicators, they've collapsed, so industrial production will just basically follow lower. One more chart. This is from Zero Hedge. Eurozone soft data, house of cards beginning to fall. This is ZEW, German expectations of economic growth, which very often is a warning sign of a recession. Basically coming down. What do we have here? We have real money. Actually, no, I've got a better chart on money supply. I've shown this one before as well. You can see money supply year on year down. Okay, economic sentiment will follow. Bank lending has literally dried up. Okay, so it's not looking good in the economy, and I think speculators will perhaps soon focus on this. But speculators at the moment, they still love the long side of the euro. They moved to a 1.5 year high in long positions last week. I'll show you the chart in a moment. And they're near a 5 year high in terms of longs. Just go back to, where are we? Go to here. I showed this chart in my last video. Net long euro positions were worth 22% of open interests, which is significantly above its recent average and standard deviation, close to a 5 year high. This chart is from a few weeks ago, and basically the position is bigger now. Okay, this is showing trend following CTAs are heavily long of the euro. Okay, longest level since September 2021. This chart here shows, you might not be able to see it well, but speculators stepped up this week to a 1.5 year high. Commercial hedgers dropped against them. Okay, commercial hedgers can very often be smart money when they go against speculators and warn of turning points. Now, if we go back to the chart. Right, just point 4 very quickly. US yield bond market at 5%. That's a really decent yield. And the USD always does well in global economic slowdowns. Now, in terms of the market, they were looking for the Fed to possibly be cutting rates within the coming months. That view now has changed, or is changing. The Fed won't be cutting rates anytime soon in our view. Okay, huge fundamental for the USD is it always does well in global economic slowdowns. And you do have a big global economic slowdown and the possibility of a global recession. It's a massive fundamental for the USD. If you don't know how that fundamental works in terms of money supply, I'll cover it in my USD video at the weekend. So market was a little bit too bearish of the USD, and it's still way too bullish of Eurozone despite a heavy fall. Okay, now in terms of levels of entry, stop and target, let's take a look at them. I'm going to do it first of all on a bounce higher. 108, you could come off this level if we rallied back to it and stalled. Okay, if we went through it, just sell back through the level, stop behind 109. Okay, now 109 should be really tough resistance. Okay, and terms of the 109 level, look at the green line, the 20-day moving average. If we are bearish of a currency, we're always looking for the 20-day moving average to provide an additional level of resistance. This is in strong trends. If you look in the euro uptrend, it provided support. You can see we broke up here, we didn't touch it yet, then we touch, rebound, touch, went briefly through it, rebound, touch, hold the level, through briefly back above, hold the level here, then we break it. We have 2 touches of it, trying to get through, can't, then we're off to the downside. So I think 109 will be a tough level to take out. I'll just draw a trajectory in as well. So there, so that roughly lines up with 109. Probably don't need the trajectory. 20-day and the horizontal line, big resistance. I'll go to where we're going in a moment, which is a long way to the downside. But first of all, I want to do it on a break lower. Let me remove those lines. On a break lower, I think you should focus on the 107 level. Okay. Sorry, I'll get my lines straight. There we go. So 107 round up, we break it, look for a follow through in terms of where you put your stop. You want to be behind 108. Okay, so behind the next round number back. So yeah, so basically play the round numbers. In terms of where we're going, we should go to first level is going to be for us 105. Okay, and I think if we break 107, we'll quickly get to 105. But longer term, I think we're going down to the par level, so down here. If you think about it, market is still pretty optimistic about the zone, despite this really good fall, and they're heavily long the market at a 1.5 year high. So for us, any rallies should fail. Yeah, a long way to go on the downside. We're in at 110.40 at the moment, so it's a decent move down, but looking for far more downside. Right, now what we'll do is look at EURJPY. Now, EURUSD is in a downtrend. EURJPY, not yet, but I think we're going to see a big break lower, so let's go and take a look at the pair. EURJPY, we'll draw the levels of entry, stop and target in a moment. Fundamentals and sentiment first. Bank of Japan, most dovish central bank. I'm sure most people watching this video will know that they've resisted what other central banks have done, which is hike interest rates. They've kept rates ultra low, no changes to policy are expected. So that's largely in the price. Okay, now point number 2 is a good one. It comes from a guy called Kit Junkers over at Society Generale. Perhaps the biggest contrast in manufacturing PMI trends is between Germany, obviously the powerhouse of Eurozone, and Japan. I plotted the difference between the two, which is at its lowest level since the Japanese series started, against EURJPY, which is at its highest level since the financial crisis. The point he's making there is Japan economy is not doing badly. Market is way too optimistic on Eurozone. Okay, he adds CFTC data shows a growing yen short as well as a huge and growing euro long. So the EURJPY pair may have lots of room to fall if it can find a catalyst to get the ball rolling. We looked at obviously speculators being heavily long the euro. You can go and look at what they're doing in the yen. They're selling the yen heavily. So you've got, on our spreadsheet, which I showed in our last video, on the COT divergence is a +10, which means we can be alert for a major correction. Now, just what catalyst could get the ball rolling? I think you could obviously get repricing by the market of the ECB. Okay, you could just basically have speculators who are heavily long just start getting hit on stop, and then the media will fit a reason. You could get risk off. I don't know what the catalysts will be. We'll rely on the price action. But I just think the bad news is in for the yen. Good news is in for the euro. So we can look for the break. Right, let's do the levels. We're pressing against this 150 level. Came down here, rally back. Okay, so I'm going to say 150. This is if we break hard. That's how I'd play the trade. Get through 150. Just look for the rally to fail. And then stick your stop back behind the 151 level. Two bodies, I'd say you want to be at least 151.40. Okay, then you can look for basically a break to the downside. I'll go to my target in a minute, but just want to do it on a break lower as well. So draw that trajectory in there. Poke and a reversal. Okay, there. Now we're stalling. What if we come through this level? Okay, so we can do 149 as support. So you just want to get through that level. I'm going to say 148.80. Clear of the round number and the double trend line. Where would you put your stop? You could put your stop behind the 150 level, something like 150.40. Okay, now where could we go on the downside? The COT is really extreme in terms of EURJPY. In our experience, that should give a really big move to the downside of around 600 pips as the speculators get hit on stop. So obviously our view has got to come correct, but it's a really good risk reward on a break lower. If we went higher and you have a failed breakout, it's an even better risk to reward. Obviously our view has got to come to fruition. Now Euro USD is already broken to the downside. When it broke down from 111, you didn't find many forecasters who were looking for a big fall. Okay, you won't have many forecasters this moment in time looking for a big break in EURJPY, but that's very often when they come. So there we go. There are two pairs. We'll see how they go and we'll update them. I'll do a weekly forecast at the weekend with some other pairs. But we like the look of the Euro USD for continuation and this one for a trend reversal. Thank you for watching the video.